Hi, good afternoon, friends. How are you? Hope you are doing well. Welcome to the Fund Self Plan channel. Today, yet another video, yet another important topic. As per the current this month is the month of March. We'll discuss today the important two tax savings about two important tax savings instruments. One is the ELSS, the equity linked savings scheme offered by the different mutual fund houses, and second option is the ULIP, the unit linked insurance plans offered by the different insurance companies. So there are in market, everybody, especially the insurance companies, say that the ULIP is the most efficient product for the tax savings, because it will give you the insurance coverage and also the investment option, and also you have a liquidity. After 5 years you can withdraw the money, and the charges for the ULIP is nowadays is very low. So every insurance company put the argument that they are ULIP is a better product than ELSS. So and most of the insurance companies say they are they are having the some of the ULIP product have NAP guarantee kind of a product, where you can have the some guarantee on your on the price on your NAV also. They are bringing this kind of attractive products to attract the client. Let's understand what are those products are, and whether the ULIP is better than the ELSS or ELSS is better than the ULIP. First, I have told you about the basic idea about the ULIP product. ULIP is a basically combined insurance and the investment, where if you invest some money, that will be locked in for the 5 years. Here you will be getting the tax deduction. Whatever the money you are investing under ATC, you will get that at the tax deduction. And whenever after 5 years, or any point of time after 5 years, whenever the maturity happens, that will be deducted under, there will be no tax on that. So under the income tax section under 1010D. So you have a both side, you have a benefit. And also you need to remember, this is not applicable for the single premium product. This is available only for the regular investment product. And if you see that the return of last 5-6 years, the most of the insurance companies has given return close to 10%. There are some plans of the different company like Aditya Birla, ICICI, HDFC. Some of the product are quite decent, have given the decent return. And the ULIP also charges the expense ratio on here the whatever the charges, there are 2-3 charges are there. One is your administration charges, second is the mortality charges, and third is the FMC fund management charges. They basically charge the customer in these three categories. The mortality charge depend on the on your age. Depend on your age, the mortality get charged. That is the amount for the insurance coverage. Second, the FMC, the fund management charge, as per the regulator, now it is within the 1.35% of the funds amount. That is the expense ratio is kept under 1.35% as per the regulator. Third option, there is some administration charges. So if you consider all three things, there is at least 5 to 6%. If you see, at least 5 to 6% charges are there at the beginning. Maybe later years the charges get reduced. And there are some options, some of the companies offering, they are having offering the loyalty bonus. So if you are running the plan for 10-15 years, they are offering you some loyalty bonus. Apart from the return they are offering, they will add some additional units, and whatever value that will get, means whatever the amount you basically will get, you get some additional amount over and above your maturity amount. So that is these kind of options are available nowadays from the different companies. So if you are interested in ULIP product, you can check online of the different companies product. But there are some problems with the ULIPs, because the whatever the money you are investing in ULIPs, you will be not be getting any the portfolio, where if you have that money definitely getting invested into the equity market or debt market, but you don't have any option to having idea the which category of stocks, in which portfolio your fund is getting invested, and who is the basically your fund manager, how efficient is the fund manager, the track record of the fund manager. These things are not available. So if you just wanted to know about the fund philosophy and all, so these are also not available most of the cases. So this is one of the biggest disadvantages of investing into the ULIP. But there is one additional advantage also. The ULIP, there are different schemes. If you invest in a particular ULIP product, they have having options to invest your money into the growth segment, into the income segment, into the balance segment, and you can have the option of the switching your fund from growth to means if you can switch the option from debt to equity or equity to the balance. So there is a free switching option available in some of the companies. So this is also beneficial. So if you can manage the money accordingly, according to different market situation, if you can switch the money from the equity to debt or debt to equity and manage the money properly, then can you get benefited from here. So this is the basic idea on the ULIP products. Next we will discuss about on ELSS. So what is ELSS? ELSS is full form is equity linked saving scheme. This is offered by the different means most of the mutual funds companies are offering the ELSS product. ELSS is a very popular product and one of the best product, maybe the best product in the segment for the tax savings, because this is the only product where you can keep the money only for 3 years. So any other option for tax savings, you at least have a 5 years is the minimum. So ULIP is the ELSS is the only product where only you have to keep the money for 5 years, 3 years mandatorily. Later on you can withdraw. So but it is as per your means discretion whether you want to withdraw or keep the money over there. So and also you have an option to have the ATC. You will be getting the tax deduction under ATC. If you see the return for which you are investing into the ELSS, average return in the ELSS category last 10-15 years is close to the 15%. Some of the fund has given the very good return, that is close to 20% also. So as far as return is concerned, the ELSS is far efficient than the ULIP product. Here also you have the option to choose the fund manager, and you have the option to invest as per your choice. There are so many companies, mutual funds, ELSS instrument available to the market. And here also every year, and this is not a regular product, means here if you invest in a particular year in company A, you next year you don't have to put money onto the company A same product. So you can choose every year, you can invest into the different companies product. You can next year, if you first year you are investing in A company, next year you can invest, if you find the B company's fund is better, you can invest in that company. So accordingly every year you can choose the new company uh, fund and you can invest accordingly. Also you have a past record of funds available along with the fund manager details, along with the portfolio strategy and details of the portfolio investment strategy. So whatever you require to understand a particular investment philosophy of the company and the particular fund, you have the availability of the all the data. And also you can from there are a lot of if you want to invest into the ULIP. You can get suggestions from the financial advisors also. You can discuss with the financial advisors and expert, and can invest accordingly onto in that kind of a product as per your choice and as per discussion with the financial advisors. There is another benefit, that is, if you are in, though the 1010D is not available, but as per the mutual fund is under the capital gain tax. So if you are investing some money, after 3 years, if your total profit is not more than 1 lakh, so definitely you will not be taxed. So this is also additional benefit for investing into the ELSS. Also there are some definitely some disadvantages also there. So one of the disadvantages is whenever you is putting the money into the ELSS, so it will be, most of the ELSS fund are equity oriented fund, so you don't have option to choose into the option to available to invest into the debt. So yeah, so you definitely you have a investment is at, will be at high risk. Most of the funds are equity oriented and invest 75 to 80%, 90% of the money into the equity and equity related instrument. So return is better, but also the risk is also high. So you need to understand the risk, and so after that, then only you should invest into the ELSS product. ELSS, there are as per the different fund house, there are some different expense ratio. The whatever the ELSS product charges for the fund management, that is called the expense ratio. The expense ratio of the different fund houses are different, so you need to understand that. And also the lot of schemes are available, so if you are, it may be get confused which scheme to invest. So that is also one of the important thing. So for that you need to consider, you need to have a discussion, and you need to have a help of financial advisor. So definitely, as far as if you see in terms of return and in terms of the liquidity availability, uh, ELSS is the best instrument for investment for the tax savings purpose. So right now, if you are really looking for something which will give you the good return with the tax saving option, so please go for the ELSS product. You see, you can check the online of the returns of the products, but return will not help you to get the future outlook of the fund. So for that you need to have a discussion with the good financial advisor, or anybody who is basically expert into the mutual fund fields. It may be your friends, you may be having your any family member who are working in this sector. So you need to have a detailed understanding on the funds, then only you should invest uh, in the ELSS products. So thank you friends, hope this will help you to understand, have a basic idea on ELSS and ULIP products. So if you find this video basically helpful for you, please like this video, share this video among your friends and families, and also help them to have a understanding on different financial instrument products. So thank you very much, thanks for the listening.